Hey folks, have a nice week and welcome to another episode of Whiteboard Invest Bitcoin News. To save you some time, let's quickly check out today's main headlines from the crypto world. First up, we have today's Bitcoin price update. Next, what to expect from this week's Fed meeting on interest rates. Moving right along, the IMF warns the U.S. on its ballooning fiscal burden. And then, Senator Mike Lee introduces a bill to abolish the Federal Reserve System. Last but not least, we have a news update from Bitcoin ETFs and Charles Hoskinson's latest tweet on Cardano. All right, now let's dissect each piece of these crypto news. Buckle up and stay hydrated, my friends. Hello there, folks. Today, Bitcoin has found strong support at $68,500, bouncing back from a low of $68,409. It's now consolidating and trading below $70,000. Here's what's important. First, Bitcoin's support at $68,500 is holding strong, showing buyers are stepping in at this level. Then, BTC needs to break through the $70,150 resistance to aim higher. If it can clear this, we might see it push towards $71,200 or even $72,000. Last but not least, if Bitcoin fails to break $7,150, it could dip again. Key support levels to watch are $69,500 and $68,500, with a potential drop to $7,500 if selling pressure increases. My take? Keep an eye on these levels. A break above $7,150 could signal a strong move upwards, but failure to do so might mean more downside. As always, stay informed and ready to adapt. Now we're diving into the latest buzz from the Federal Reserve and what it means for us crypto investors. So, the Fed is expected to keep their benchmark interest rate steady at 5.25 to 5.5%, the highest it's been in 23 years. Their main goal? To squash inflation, even if it means cooling down the economy. Now, why should we in the crypto space care about this? Here's the deal. First off, stable interest rates mean no surprises for the market. If the Fed suddenly raised or lowered rates, it would shake up traditional financial markets, which often trickles down to crypto. So, steady rates give us a bit of predictability, which is always nice in our otherwise volatile world. Now, let's talk inflation. The Fed wants to see inflation drop to around 2% before they consider lowering rates. This means they're playing the long game, and we might not see rate cuts anytime soon. For crypto, this can be a double-edged sword. On one hand, high interest rates can make traditional assets more attractive, potentially pulling some money out of crypto. On the other hand, if inflation remains a concern, crypto's role as a hedge could become more appealing. Interestingly, the market isn't expecting any rate cuts until at least September, and even then, it's not a sure thing. Traders have been adjusting their bets, especially after a hot job market report suggesting inflation could stick around longer. So, patience will be key here. One big thing to watch is the Fed's quarterly economic projections. Last time, they hinted at a few rate cuts in 2024, but with stubborn inflation, those cuts might not happen as planned. This can influence how institutional investors view crypto. Will they seek safer assets or take risks with higher potential returns like crypto? And let's not forget, Jerome Powell's comments are always a big deal. After their meeting, his press conference will give us clues about the Fed's next moves. If he hints at keeping rates high longer, we might see some market reactions, both in traditional finance and crypto. So, what's the takeaway for us? Stay informed and be ready to adapt. The Fed's actions are a crucial piece of the puzzle in understanding the broader financial landscape. Keep an eye on those inflation numbers and be prepared for some market shifts as new data comes in. Next, we have some important news from the IMF that could have major implications for us in the crypto space. So, the IMF's second-in-command, Geeta Gopinath, is urging the U.S. to tackle its growing fiscal deficit. She says the U.S. has the economic strength to cut spending and raise taxes. Why should we care? Well, the fiscal health of the U.S. can significantly impact global markets, including crypto. Here are the key points. The U.S. debt is projected to hit record highs by 2029. High debt levels can lead to economic instability, which might push investors towards alternative assets like crypto. Gopinath is pushing for reforms in pensions and medical spending, which are crucial due to the aging population. These reforms could impact government spending and economic policies, indirectly affecting the crypto market. 2025 is shaping up to be a critical year, with potential changes in tax policies depending on whether Trump or Biden influences the future direction. Policy changes can affect market sentiment and investor behavior in crypto. Gopinath also warns that while AI could boost productivity, it poses risks to employment. This technological disruption might drive more people to look for financial independence through crypto investments. The IMF supports higher taxes on the wealthy, which could lead to more people seeking tax-efficient investment options, including crypto. So, what's the takeaway for us? The U.S.'s fiscal policies and economic health are key factors to watch. High debt and potential economic instability could make crypto an attractive hedge. Plus, political and technological changes could drive more interest in the crypto market. Oh, then, big news today. Senator Mike Lee wants to abolish the Federal Reserve, saying it's failed to control inflation and debt. This has some serious implications for us in the crypto space. Now, if the Fed is abolished, traditional markets could get shaky, pushing more people towards crypto as a safe haven. Lee argues the Fed's actions have devalued the dollar. This strengthens the case for Bitcoin and other cryptos as hedges against inflation. With backing from other lawmakers, this movement against the Fed could lead to more acceptance and clearer regulations for crypto. Oh, this isn't a new idea. Past calls to end the Fed add weight to the current proposal, potentially sparking more interest in decentralized finance. In short, these developments could drive more interest in crypto. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. Buckle up, because we've got some exciting news about Bitcoin ETFs. In the first week of June, U.S. Bitcoin ETFs gobbled up almost as much Bitcoin as they did in the entire month of May. That's huge. What does this mean? Well, it shows a massive surge in demand for Bitcoin investment products, especially ETFs. Investors are flocking to these funds, snapping up Bitcoin like there's no tomorrow. And get this, the amount of Bitcoin bought by ETFs in just 1 week was 8 times more than what was mined during the same period. Talk about a feeding frenzy. The impact? Bitcoin's price shot up, hitting 71,093, the highest since May 21st. This demonstrates how ETF inflows can directly influence crypto prices. What's really interesting is that despite being around for just 5 months, Bitcoin ETFs have already amassed a hefty $15 to $69 billion in net inflows. That's 60% of what gold ETFs, which have been around for 20 years, have accumulated. That's some serious competition. But hey, it's not all sunshine and rainbows. Bitcoin's price struggles to break its all-time high due to broader economic factors. So, while ETF inflows are driving up prices, external economic influences are still at play. In summary, the surge in Bitcoin ETF investments is a clear sign of growing mainstream acceptance and interest in crypto. It's an exciting time to be in the crypto space, and ETFs are definitely shaking things up. Last but not least, we have some exciting developments in the world of Cardano. Charles Hoskinson, the brains behind Cardano, is buzzing with anticipation for the Chang fork upgrade, slated to be completed by June. This upgrade is a big deal because it's pushing Cardano into the age of Voltaire, a phase marked by decentralized governance and transparency. Hoskinson's enthusiasm isn't unfounded. He's calling this upgrade the most significant milestone in Cardano's history, and even for the entire blockchain industry. Imagine Cardano evolving into a decentralized civilization with its own governance system and community-driven decision-making. It's groundbreaking stuff. What's particularly inspiring is the years of collective effort and community engagement that have gone into making this upgrade a reality. Hoskinson's pride in the Cardano community is palpable, and rightly so. They've built something truly remarkable here. And what's the market saying about all this? Well, Cardano's native cryptocurrency, ADA, saw a modest price uptick amidst the anticipation for the upgrade. Sure, it's been a bit bumpy lately, but the overall sentiment seems positive. In essence, the Chang fork upgrade represents a turning point for Cardano, propelling it into a new era of innovation and possibility. Keep an eye on this space, folks. Exciting times ahead for Cardano and the entire crypto landscape.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.